So still, I think what we're going through right now is the deals that were put together a month ago. And we're kind of cycling through that right now. So I'm interested to see how the retail real estate market fares here in the next couple of weeks. My guess is it's not going to be great. It's not. There's nobody out looking at houses. HAR canceled all the open houses. Like they went in and just canceled all of them. Cuomo's been throwing a hissy fit about all kinds of stuff, and open houses were one of them. So they shut down all the New York stuff too, which I thought was kind of hilarious. So let me go through a little bit of the news here. Before I do that, I want to share this with you guys. We've got a whole page now dedicated to coronavirus and coronavirus updates. So these webinars that we do, the articles that we write are all going to end up here in a blog style, if you will, blog format. We're going to invite our influencers to write directly onto our page as well, and our vendors. So I'm about to send an email out to all of our vendors. Hey guys, I don't know. Let me put it this way. I know no one talking about real estate right now. Nobody. No one is talking about real estate right now. And nobody's talking about real estate, especially as it relates to what's going on here and the federal government's response to the virus. We're the only, like, Rob, do you know anybody? I think we're the only ones. Aside from people pitching their online classes. I think.
Yeah, and I guess we fall in that category too. I think there are and I'll go through it. I'll go through that sort of cycle of hope and despair thing in a few minutes. But I'm seeing still a lot of non-believers, right? Deniers. Like, hey, I'm closing. I'll list your house. I'm like, oh man, come on.
Yeah, seriously.
So that type of thing. Just if they're talking about anything real estate, it's just a denial state.
Yeah, we're at it's kind of interesting. I was listening to the replay of Meet the Press today. I'm just not a Chuck Todd fan, to be honest with you. But he did say something that was pretty fascinating. He said, this is just like 9/11. We will remember where we were when we first heard about this virus breaking loose. So it's going to be quite interesting. Things are going to change a lot in the coming months. But I think being in real estate, it's a good thing. So let me flip over here. This is the market update I gave way back on Thursday. And this is probably the most important slide, maybe the second most important slide in this whole thing. And that is the money printer go brrr, meaning the Federal Reserve and Congress cannot print money fast enough. Like, I put a post up this morning. They already blew through half of their $700 billion allocation. And that was supposed to last through the crisis. And now we're talking in trillions. $1 trillion. Look, guys, we're just going to blow a trill here, a trill there. No big deal. Of course, we're not the only country that's doing that. So keep that in mind. But I think the good thing here is that real estate is about to get damn expensive. And this is why. So this is inflation. The red line is the government's how the current U.S. government calculates inflation. The blue is actually the 1980 based SGS alternate for the consumer price index. And inflation before, I got in this argument with this guy. I'm getting into so many arguments right now, and I'll tell you why. I'm just absolutely butchering people's sacred cows on social media right now. It's just destroying humanity at this point, because a lot of things that I've said over the last couple of years are all coming to fruition. They're all coming true. In fact, the things that we've said in those emails over the last 2 weeks are coming to fruition. I should say 23 days. I've been writing 1 to 2 of these emails a day for the last 23 days. This is one of them. Somebody said, well, Jason, this was just like last time, bro. There wasn't hyperinflation in 2008. And I said, how do you measure hyperinflation? And then all of a sudden I don't get a response. So I can tell you right now that blue line after 2008 jumped up above 12% a year in inflation. So what does that mean? That means your dollars better be inflating at least 12%, or they're worth less every day. If you're only getting a 6-7% rate of return on something, you may actually be losing money in the long term. That's really the only reason to measure inflation in my mind. I mean, what a car costs is what a car costs. What I joke about, I used to, when I bought my truck, I guess it was last year now, 18 months ago, the joke was to get a really nice truck, it takes like $50,000 to $60,000 to buy a nice truck. I tell my dad that. My dad hadn't bought a truck in a couple of years, and he's like, "Are you kidding me for a baby truck? Because it's only a half ton. It's only a Tundra, right? It's not like a F-250 or 350 with a diesel." He's like, "Are you telling me a truck was $65,000? That's inflation." And if you hadn't shopped for any durable goods lately, that's what it costs. Housing is directly related to all this. Housing is definitely a part of the consumer price index, although it's not as weighted as much as it was. But here's the next crash. Let me put it this way. All you guys have been worried about a crash in the stock market. Guess what? It's here. So we can stop worrying about the current crash. We can worry about the next one. And I'm telling you, the next one's going to be in the dollar. There's no other way around it. That is the next asset that at some point the world is going to challenge the reserve currency, which is the US dollar, because of the things that we're doing to the dollar right now. I'll just show you this chart real quick, and then I'll talk about a couple other things here. This is fascinating. It's something I've just started. I've looked at this chart before, but I kind of forget about it, and then I kind of come back to it. Well, if the dollar is not the reserve currency and the petrodollar, it's kind of funny. You don't hear anything about the petrodollar, and Bitcoin sure as hell ain't going to go anywhere. Neither of the other cryptocurrencies. Really, the only, quote, reserve currency out there may be gold. Now, I'm not a gold guy. I don't own a bunch of gold. I don't even buy it as jewelry. I don't even think I own any gold. Be just perfectly transparent. So this is the Dow to gold ratio, meaning when people tell me, well, Jason, the Dow is at an all-time high. I'm like, at an all-time high in what? In dollars? In gold? In what metric are we using? Because if we're printing trillions of dollars a minute and the stock market goes to $1 billion, is it really worth $1 billion? Or is it worth $1 billion in something that's worthless? And I think that's a good kind of metric to have in the back of your mind. What's the denominator? Is gold the denominator? Is the US dollar the denominator? What's the denominator that we should be operating in with regards to financial assets? And just so this is the stock market. This is the most recent one I can find for housing. That's 2016. I really wish I could find a more updated version of this. If you guys can, I would love to see it. But you see, housing is below its mean average for the gold to housing ratio. So again, I just want to reiterate this, and then I'm going to go over some of the news today. Your job as CFO, CIO of your household is to convert financial assets into real assets, period. That's it. I hear people say stuff like, man, Jason, I'm going to have like $1 million in real estate, then I'm going to have $1 million in the bank. I'm like, why would you want $1 million in the bank if it is losing 10% a year? Like, why would you want that? I don't understand that. That money sitting on the sidelines is losing you money. Now, you do need to have reserves and you need to have cash in the bank. You've got to have that. It's a part of operating business. There's a lot of businesses right now. There's a lot of smart guys that went to business schools, much better than mine, that are learning a real hard lesson right now. You got to have some cash in the bank for a rainy day, which is kind of funny. So let's click over to my boys here at Zero Hedge. Oh, let's see here. Nonsense. Let's get into, wow, Boeing shares halted. That's insane. Let's talk about, you may have missed some of this. This is insane. Coming into Monday, the Fed had a problem and it already used up half its entire emergency $700 billion for QE5 announced last weekend. That is absolute insanity. Like they've unveiled open QE, including corporate bonds. They're now buying corporate bonds. They've never done that before. Truth be told, I don't know how they're doing it because they need congressional approval to do it. So how this all happened is still, and you guys are starting to see the civil liberties folks get really fired up. And I don't blame them. Of course, it falls on deaf ears 90% of the time. But I honestly have no idea how they're doing this. I really don't, because they needed Congress's congressional approval to do it. So it's very strange. Maybe they're just doing it and waiting to see what happens. But then here's all the other support that they're doing, which is really screwing up the mortgage-backed security market. The MBS market is a total mess right now. Let's see here. Where is, I saw a great, everybody wants a bailout. Private jet industry needs a bailout. This is funny. Rabobank says there's 100 million, could be 100 million in lockdown in India. India has 1.3 billion people. They need to lock the whole country down, to be quite honest with you. Gasoline's at an all-time low, at least since 2001. Where is, oh, this is interesting. I just saw this too. Again, how they're doing this without a congressional approval, I don't know. So Wall Street's now buying investment-grade bond ETFs like LQD. So they're buying anything and everything to hold up the financial markets, which tells me that we are about to hit some rapid inflation, just crushing inflation. I posted this one this morning, at least this chart. This is already, by the end of this week, it'll be $1 trillion. In 2 weeks, we will have blown through $1 trillion. A trill. It's absolute insanity. So I'll tell you right now, and Rob, I'll hand this back to you here in a minute. I will tell you guys right now, you think real estate's expensive now, just wait. There's going to be a little temporary blip here on the market where real estate investors are going to get cold feet. So those of us who are active, in fact, it's kind of funny. We had our conference call this morning. We're going to contract that office building, and there's going to be a big announcement about the Texas Real Estate Investing Center this afternoon. In fact, we're going to do a Facebook Live from the contract signing at the office. And what's fascinating is me and Rob and our commercial broker, Russell, were having this conversation this morning. And he said, man, I closed one yesterday. I got some other stuff under contract. And he said, the professional guys that do this, full time like us are going to keep buying. And he said, the guys that are not seasoned are going to start to get nervous. I said, I don't think there's going to be any more great deals out there. Now, commercial might be a little bit different. Like, I don't think there's going to be, I'm not predicting this huge 2007, 2008 real estate crash. I don't see it coming. Some people have said, well, Jason, there's going to be all these foreclosures. No, they're not, because the government said they ain't foreclosing on anybody. In fact, my guess is they're not going to allow any foreclosures until a certain percentage of employment occurs. So I can tell you right now, if you're thinking this is 07, 08, and you're going to go buy all these foreclosures in Pasadena for $10 a door, not happening. I told you guys that for 7 years now. 2007 ain't coming back. It's the girlfriend you lost. She ain't coming back. And why is it not coming back? Because they are not going to allow that to happen again. They will print money. They will tell people to stay at home. They will not foreclose on these houses. They'll buy all the mortgage-backed securities. The Fed will, in order to prop up the banking system. So nobody's losing their home. Like, everybody thinks, oh, there's going to be all these foreclosures. It's going to be great. No, it's not. It's not going to happen. The only thing that's going to happen over the next 30, 60, 90 days is there are going to be less real estate investors in the marketplace. There's going to be the same number of deals. So if you stay in, you're going to get the pick of the litter. But I don't see some big, huge real estate crash. I don't see it coming. They are not going to allow it to happen. Yeah, one thing to keep in mind, it's very different than 07 and 08. Remember the 07 crisis, where it really got kicked off in 08, was right in the middle of the transition from Bush to Obama. The election was over. So if you guys think there's this, there's going to be this big crash and all these people are going to lose their house. No, there's not. We are in the middle of an election year. Remember, it's just not the president's getting elected in November. Bunch of people in Congress, bunch of folks locally. Like, this is kind of like your kids 2 weeks before Christmas. Everybody's on their best behavior because Santa Claus is coming to town. And Santa Claus is the voter. And they are not going to allow these systems to fail. So you think there's this glut of inventory and there's going to be all these deals. You are going to be sorely mistaken, because it's not going to happen. Now, I will tell you this. There is one thing that Trump is right. It's going to amaze you how fast this stuff comes back. I mean, they're pumping so much money into the marketplace that it is going to come back with a vengeance. It really is. And I've said this now for 3 years. If you think real estate is expensive now, just wait. Remember all those bailouts, all that stuff, some of that ended up in real estate. And remember, the United States is not the only one doing this. All these other sovereign nations are doing it, and they're all looking for yield. So I'll tell you where it's going to end up. It's going to end up smack dab in assets that already have value. That's called real estate, the things of an economy. It's real estate. So if you guys sit on your laurels too long here, and I've predicted this, in the next 5 to 7 years, you will not be buying rental properties in Houston and in Dallas in good areas of town. The median home price in a neighborhood that has an HOA will be well above what you can rent those houses for. And they just won't cash flow with a mortgage. So do not wait. That's the glimmer of hope in this whole thing, is although they're printing all this money and I am vehemently opposed to it, at least I'm in real estate where I can hedge inflation because it's coming. It happened the last 8 years. Again, like I said, I got in these arguments with these dudes on Facebook. And I'm like, look, inflation's it's already been moving along at an 8-10% a year clip. 8 to 10% clip. You're telling me your stock market returns at 15%, you're making 15%? No, you're not. After fees and everything else, you're making 8, but the market's injecting 8, or the inflation's 8%, you're at net 0. That's why real estate's so important. That's why we added equity into our fund. That is exactly why we do it. Because I'm like, yeah, we can pay them 9%, but a lot of this appreciation is going to come from inflation. How do you hedge inflation? Real simple. Let's give them some appreciation in the fund. That's why I did it. Because I could sit there and do the math, and I'm like, 10% appreciation on these assets is going to be huge, because half of that appreciation is going to come from inflation. So highly recommend you guys figure out. Now, the short term, it's probably not that big a deal, but over the next 3 to 5 years, it certainly is. So, all right, Rob, you want to take us through the
Yeah, I'll go through some of the stuff here. Stop your share.
Yep. Oh, let me stop my share. Hold on. There we go.
So I will I'll put this up first. Does everyone remember this? This was like huge, like in 2008 to 2011, right? You see the picture, Jason?
Yeah, I can see it.
Like I think we're getting closer to opportunity than most people believe, right?
Oh, I
and
think
so. And I don't, for the record, I don't have a grasp on the numbers and the mechanics as well as Jason does in the stock market and these other markets, but I do believe I have an understanding of some behavioral sciences. It's a little thing that I like to read about, and so I'm a big believer in the fear greed model, and this thing that Congress has been pushing off is absolutely affecting the marketplace. Because I'm looking at some of the comments, nobody knows what the fuck is going on, right? And nobody's clearly defined this stuff, and there's no list out there of things that have been defined, and we're still waiting. And when there's uncertainty, the market goes down, right, based on fear. And so, I just deployed my last little bit of money I had in my TD Ameritrade account. So I think we'll start seeing some stuff, but I think risk is high, and I think we're seeing that from the lenders, right? So this is something we spent the last hour talking to 3 different lenders, as well as looking over some emails that had come through our lending company, and we're kind of shocked, right? So the question, and here's the question I keep seeing up in our Facebook group, and I'm about to delete that post. It's not who's lending. Right? Because everyone we talked to said, well, we'll lend, right? But that we're getting back to that sort of 2010 mentality where it's like, I'll lend, but the real question is, what are the terms? Forget the rate. Forget the fact that it's going to be 3 points and 8% for a non-QM 30-year. Forget that. What are the terms? we're seeing a lot of folks immediately shifting, like no more value calculations. It's loan to cost. And that was 3 of the big underwriters. Everything that they wrote on emails to us came out as it's loan to cost. So that means skin in the game, guys. Right? This I'm going to get a house for free thing is kind of going away, like it went away in 2008, 2009, 2010. So
Rob,
now,
I want to reiterate that point because this is real estate guru bullshit run amok.
yeah.
When the credit markets collapse and when real estate markets contract, everyone thinks, oh man, there's going to be all these deals. There'll be no money out of pocket. No, you're not, because banks aren't stupid. They recognize that, okay, the values are changing so rapidly. In fact, it's to go into your fear, hope, greed model here. You go from euphoria, anxiety, you start that downward track. Banks are not dumb. They look at that and they go, well, the values are declining. I don't know how much they're declining by, but we'll only do 70% loan to cost. You're always going to be out of pocket on these things in declining markets. There's no free real estate in a declining market.
Right. And so the questions you guys need to be asking, and I'll show you some of the, I'll go to a calculator really quick here. But it's, what are the cost? Is it loan to cost? Is it still loan to value? Right. And I'll tell you what the reality is it changes by the hour. Right. 2 of the 3 people we spoke to this morning, Jason, literally told us it's changing by the hour.
Yes.
So any loan officer blowhole out there saying he's got all the money in the world, they don't know. I'm going to take that most of the posts I'm seeing on Facebook are just loan officers trying to drum up business, which is fine, which is what they always do, right? But we've cut that bullshit out and we've gone right to the underwriters. We want to know these companies that are the private funds that funnel money to us, where are they? And so the non-QM 30-year guys are pretty much timed out. Are there a few? Yes, but what I mean they're timed out is 2 weeks ago we were at 5.5%. Let me show you what I think is people are going to start making some mistakes on. Let me share something else here. The good old mortgage calculator, right? So 2 weeks ago we were at 5.5%, maybe 1.5 points. I'm not even worried about the points. It's inconsequential, right? Maybe 5.5%. And we were prepared always to put, 25% down based on the value. So this was the true loan amount. So you have a house for $150,000. And, 2 weeks ago, we were looking at, hey, there's equity in there. There's 20% equity in there. We'll bring a little more money. No problem. Maybe $7,000, $8,000 to close. 5.5%. My monthly nut was going to be $1,000. And if I follow the 1% rule, should make $1,500, right? So there's still room there to cash flow. And so here's some of the things that we're actually seeing is you've got to start playing these calculations a little bit differently because the home value is worth $150,000, but that no longer means anything. You have $110,000 into it. You're bringing, and they're going to go loan to cost at 85 is the best I saw. So you got to bring, now the loan goes down, right? But you're bringing more cash. It's going to be 18,000, 20,000. And here's the rates that I'm seeing today. I'm seeing 8%. So if you went deep, you're good. Keep on buying. If you're buying turnkey stuff and hey, it just needs a little paint and carpet, and it's not going to hold, and it's really you're buying this thing at $100,000 and you're thinking 1,000 months rent. Be very, very careful. Here's the other thing I'm seeing, Jason. This is the big one. I don't think really people understand when you start seeing 25-year AMs.
Oh yeah, they start shrinking the AMs.
Yeah. So now I'm seeing 20 on what used to be, residential. Now my number's popping up. Well, we're asking the wrong questions, guys. You're asking if anyone's lending. The answer is yes. People will lend. Hell, I'll lend you money.
Yeah, I will too.
Yeah, I will too. But what are my rates and what are the terms? Right? And this is the biggest one. Are we talking about a 30-year AM or a 20-year AM? Because now I start cutting that number. Now, if I'm truly at $150,000 and I'm only in for 120, that means I still got to bring now 35%. Let me hit the refund. My mortgage payments start creeping up, and it's squeezing the cash number. But here's the biggest thing on all of this and why they're timing out. I'm only interested right now in buying properties that do not have tenants.
I want you to repeat that, Rob. And this is very important right now.
I want them empty. So I'm buying a 3-unit in the south there, and I want them empty. I do not want them with tenants. And hold on a second. Sorry, I'm bringing a little mac and cheese. And I think that's what every underwriter is looking at, because we don't know. Someone just posted, hey, the foreclosure is going to go up. Maybe, unless there's forgiveness, right? And Trump made it very clear when he said, people were talking about, and even Cuomo, we're not gonna foreclose for 90 days. Talk to your lender, all this other stuff. But remember, Trump only controls the FHA stuff. He can only ask for that for Fannie and Freddie products and any other FHA product. It's the non-QMs, right? And this was another lender that we spoke to today who said, hey, we told him what we're doing. Like, you need to make it clear that this mortgage forgiveness and non-foreclosure stuff, the only ones they're talking about are owner-occupied through FHA. No one has said the investor is protected here. Right? We talked to another guy this morning who said, I have a lot of money on the street and I expect every lender to pay me. So we're rushing, and again, we're only in the buy and hold world. If you're a flipper, that's even worse. One hard money lender said today, we'll lend money, but we're really only looking at buy and hold. They're not doing the flips, and if they are doing the flips, our ARV number dropped down to like 60, 65%. Because if you flip a house and you're good, you flip it in 90 days, 120 days. What does that look like 120 days from now?
Yeah, I mean, we're seeing reports that this thing could last for. Cuomo came out and said it could last for what, 6 months, 9 months? You're like,
Jason and I are of the belief this is a 12-month event, and everything we're doing is with a 12-month timeline. So I'm watching Facebook, and I'm watching all these guys who are sort of living here in this euphoric state, and it's risk, and everything is great. And, oh my God, this is going to be great. And, Jason and I are down here. We're looking at the opportunity, but we're also looking at, hey, this has got to be real. Don't be signing a contract if you don't have a lender locking you in. Oh, and by the way, 2 of the big lenders said no more locking in. They're not honoring their obligations.
Oh, which is funny. When I first got that email, I was like, well, what's the point of the lock?
Right.
It's the old Seinfeld reservation. You guys have not seen Google Jerry Seinfeld reservation. What's the point of taking the reservation if you don't keep the reservation?
Right.
That's exactly what's going on with lenders. What's the point of the rate lock if you don't keep the rate lock?
Right. So Brian just asked the question. He asked the question that everyone is asking themselves. So if I have a deed in trust and a note and the tenant doesn't pay, can I still foreclose?
I don't know.
We don't know. Because I'll take the contrarian point of view, right? One, what do you do, Brian? Do you throw them on the street? if they have coronavirus or they're a carrier? We just throw them out there when we're telling everyone to stay at home? Do they get 90-day forgiveness where basically the country is telling you, hey, you're on the hook for 90 days and go talk to your lender? And while Fannie and Freddie will say, yeah, we'll do 90-day forgiveness, we understand all that stuff, we're going to add it to the back of the mortgage. You now, instead of have, a 30-year loan, you have a 30-year and 3-month loan, right? Like, no one's giving you free money. They're just going to tack it on the end or redo the principal and spread it out over 30 years. Or because it's you and it's private, no one's paying you anything. Therefore, if I'm a big billion-dollar asset and I'm lending my money out to a number of different, you know who they are, a number of these guys, and no one's paying the rent, which means you can't pay the mortgage, what do? Well, the first thing you do is you stop taking any more of those risks on.
Which is exactly what's happened, right?
Right.
So,
nobody has an answer. We're going to stop putting our money at risk.
So we're not doing anything until we have someone, unlike the president, who just walks up to the podium and pops off and says, well, nobody should get evicted and nobody should lose their house. Whoa, hold on. Whoa, hold on there,
right?
Dude. It's very similar to what Obama did with the car industry in 07, 08. What do you mean we're taking 1,000 years of bankruptcy law and turning on its head? Whoa, everyone slow down. We're not making any decisions today. They're going to impact, but apparently we get up on that podium, we start popping off without thinking of the financial impacts to our businesses. So yeah, what are those notes worth now? Who knows?
We also asked our lenders this morning, have you seen anything from the regional and local credit lines? And the answer was nothing alarming, but the banks are actually calling the hard money lenders and asking them what they're doing. Right?
Mm-hmm.
That was shocking that the banks are now calling the hard money lenders and asking them what's going on in the street, right? For those of you who may or may not understand, and if you took the Loan Doc workshop this week, you know that hard money lenders there's 3 types of hard money lenders. There's a hard money lender that are gonna have a line of that use all the funds. This is what we're talking about. And I just keep mentioning the ones that like Lima Capital or Pier Street or I forget the guys out in Austin, right? You're using those guys and just brokering their money. And they're everywhere, right? That's the guy who stands up in front of the room and says, I am a hard money lender. You've never heard of him. He doesn't have a party. You're like, who is this guy? Well, they're a broker, right? And that's okay. That's how wealth is created, by brokering things. That's one type. 2 are folks who do first deed of trust, meaning Mike needs a loan, and I go to Bob and I say, hey, Bob, I know this guy Mike. I've qualified him. I had the application. I reviewed it. I have the loan. I did the appraisal or the BPO. I reviewed the scope of work. Bob, I think you should lend Mike 70% of the money in a first deed of trust through our organization, and we'll close with you. So we do an A to B to C type of deal. It's kind of funny how hard money lenders are doing all the things that wholesalers try to do but can never get done. If you think about how they close, right? And so they have a first deed and they lend on that, right? So they're sort of matchmakers, and they do that with private lenders. And then the third is lines of credit from regional and local banks. And then good hard money lenders will have a combination of all 3, which is like jet lending, right? They do all 3. And so we asked, hey, are any of the sugar daddies, that's what we call the private lenders, are the sugar daddies getting nervous? And some are. The regional banks and the local banks have not said anything, but I gotta believe, Jason, by the end of the week we will have some some guidance from these local and regional banks on what they're doing as far as putting money on the street for hard money, bridge loans, and even longer term loans.
Yeah, I think what they're doing right now, and the reason we haven't seen much disruption, is that they are still playing in the, well, we've got a relationship with these borrowers, so we don't want to screw up the deals they've already had in place. But going forward, let's see what gets placed. I think that's what's going to be very interesting.
Yeah, and I think what we're seeing in the real estate market is just an acceleration of this downward spiral, right? And I see guys, there's nothing wrong with the market, man. I'd be buying, and I'm like, okay, well, who's lending is the next question.
Yeah.
How are you buying? How are you closing? What happens in California when they shut down the courts and they said open houses are not essential? You're gonna have a backlog at title companies. There's real issues out there. Real, honest to God issues, just with the logistics of buying a house right now.
Yeah, we were chatting with one lender today. He said, what happens when they actually close business and say, yeah, it's shelter in place. Your title company's not doing anything.
Yeah. So I will, if you follow this curve from optimism to optimism, we're seeing most of the people on that downward slide in our world. And I'll tell you what, Jason and I are already at hope. Is sort of the best way to describe it. We know that loans are going to be tough over the next 90 days, so that's fine. We're working with private lenders, and we're doing our syndications and our fund. We have every intention of paying everyone that we owe come April 1st. We are cash. We have a bit of a cash reserve, which we did. We built our business, so we won't have any problems paying anyone. Most of our investors, Jason, want to reinvest.
Yep.
I talked to 3 today, and they're like, "No, just put the money back in." I'm like, "Great, okay."
Oh, they don't want their
No, they don't want their payout. They just want to reinvest. They want more shares. So we have hope. Our strategy, what we have done is we've moved into equity only now. Other than maybe 1 or 2 hard money loans that we've applied for that we think are really good deals, we've now moved into, if we're going to do this, it's going to be equity only. So that's where we're at. Any questions on what we're seeing? Because I saw a lot of lenders out there telling everyone we're lending, and I'm like, how can that be? What am I missing? So we got on the phone with our lenders, and the answer is yes, they're lending, but everything's changing by the hour, and we'll see even more constrictions on the terms by the end of the week. So as far as the political stuff, I'm not really interested in any of that stuff. That'll get done in the next 24 hours. It'll happen. I'm not all overly worried about it. That'll get done. And then we got to really be interested to see what happens when we do some targeted relief over the next 90 days. I think whatever is out there is going to get taken care of. I think most people are going to get a check. So someone asked, what do I mean equity only? So we're doing a syndication right now for a bunch of properties in Corpus and properties inside the loop. And we're essentially, if you understand commercial, we're buying at a 9 cap. Our exit in the next 3 to 5 years is to sell at a 7 cap to 1031 exchanges, ride this thing out. But our investors who are coming into those syndications are parking their money for 3 to 5 years. And we're like any other apartment syndicator. Our hopes are to double their money over the course of the project. Big yields, 15%, 18%, whatever the numbers are. And we have pro formas for folks we have a relationship with. It just shows, hey, this is what we think we can do. But what we mean by that is if you put in your $100,000, that's the minimum. If you put in your 100, there's no monthly payments other than the rent. And so everyone going in needs to understand that, hey, the next 90 days we might not see any rent. We also have to do some rehabs. So we want everyone to understand, hey, that first year is what we call the stabilization year. And while we're stabilizing the projects in that first year, we're not throwing off a whole hell of a lot of cash. But the exit and the plan on that is to double the money on the sell, not by making a lot of money on the rent in the first year.
Yeah, it's 100% cash fund. We're not using any debt.
Yeah, so that's what we mean equity. We don't want any debt. We don't want any loan payments. We don't want any chance of foreclosures or seeing money disappear or pulled back or any of that stuff. So we're going in on our 2 syndication deals as equity only.
I like this question. I agree with you on the foreclosure forecast, but what's your outlook on fire sales? Those unemployed looking to get out from under their debt. It's not going to happen. Like, that's what I'm saying. If the government comes out and says no foreclosure, there's no foreclosures. You have no job, there's no foreclosures.
Right.
It's just not going to happen. It's just like Hurricane Harvey, where they said for the first 3 months, no foreclosures, but that didn't really impact the market because it was just Houston. And it was just houses impacted by Harvey. It wasn't the entire marketplace. So if they say no foreclosures, that means no foreclosures. They're not going to foreclose, that period.
Any other questions, guys?
I will add one bit of good news. Evidently, the new MacBook Air came out, so I can finally order a new MacBook Air.
Oh, that's funny.
Somehow that news got squashed. It evidently happened here in March. I've been waiting to order a new MacBook Air because the keyboard on the new Macs is terrible. So I finally need to upgrade my MacBook Air after 5 years. So actually 6. I think this one's 6 years old.
Anyway. Someone asked, are there any non-QM loans on the market? There are. There absolutely are. But, I think this is what you're going to be looking at now. Right? I think you're going to be looking at maybe 8. I don't know.
I think they're just going to be, here's the deal. Don't get me wrong. The Fannie Mae stuff, those MBSs are all screwed up too. The rates are all over the place. In fact, I just got a call back, Rob, from our high-speed Fannie Mae gal. So we'll call her back at the end of this, end of the deal here. But those rates are all over the place. They jumped a point in a couple of days last week. The entire mortgage market is in a tizzy because they don't know how to price risk. That's what's happening. So my guess is give this another 30 days or so, and the mortgage market will start to calm down a little bit. But it's a total excrement show. Tommy asked, I'll answer these. Tommy asked, how are your Airbnbs performing? Forecast. You know what's kind of crazy? Our Airbnbs aren't doing that bad.
We keep getting bookings,
which makes no sense to me. But we're getting bookings down, even the ones on the beach. We're getting bookings for the ones on the beach. So they shouldn't be. Everything tells me they shouldn't be doing good, but they're doing just fine, which is strange. How are you still continuing with rehabs? How are you handling the city permits and inspections?
Some of the cities have an app. And we've actually done one inspection last week where we basically opened the app on our phone and showed them the plumbing. So we had one city was basically cleared us to go while the guy basically watched on his computer. So some of these cities have apps and we're moving. I think the plan submittals for ground up and add-ons are probably going to be the hardest thing hit. But all our crews are working. They just hit me up for a couple more $1,000 in materials today. So they're all out there working on every job we have, and we're looking to add more. One of the things we have to do this week is really organize our construction, tighten things up, because I know we're going to pick up some better contractors over the next 90 to 180 days. So we want to be in a position to doing that. We did it in Corpus Christi. For homeowners with $100,000 equity, should they pull out now or is it too late? I don't know. Let's look at the refi. The refi still look good.
Man, look how far that 15-year jump.
I
Because
know it sucks, but still,
we were in the high twos at one point.
yeah.
But you know what? I think it's going to come down. We just need the market to return to some level of normalcy.
And we're seeing a lot of there's your guys. Bank of America, pretty low. So you're gonna have to shop a little bit, but I think the stuff's out there. Arthur, it's on our Facebook Live. You can go back and watch on Facebook Live. I don't know if the city of Houston is doing them. I hope they are. We'll find out this week. I got a call for some inspections. We don't recommend any investment strategies, but I'll tell you that we are not doing our own refis right now. We think once this stuff gets settled, we'll see these rates dip a little bit, and then we're going to pick up. But, just again, guys, think about the logistics of refining or even buying a house. So, one, I buy a house. I got to get a contract signed. I got checks, and I got to get delivered and wired. And is title open? Is anyone at the title be able to take my check? Do I have to wire everything now? Does your bank even allow wirings? Are you scrambling to do that? Great. Now, home inspection. Who's doing the home inspections? Are guys still going out there? What happens if there's a lockdown in order? Is a home inspection essential business? No, it's not. So now we can't get the inspections done. The appraisers are already backed up because 3 weeks ago the mortgages went nuts and everyone signed up for refis. We talk to appraisers every day. Appraisal Nation, 3 weeks behind. So what happens if you buy one today and you get your appraiser and he lines up and I'll be out there come April 12th. All of a sudden, April 1st, state of Texas shut down. We don't know. There's unknowns. How do you get this thing signed? Is ever going to be allowing DocuSign? Is the state going to write an exemption for real estate that we can do DocuSign right now as long as we come back 90 days later and get a wet signature? Probably not. Now we need a wet signature. Who's running around doing the wet signatures? Is that an essential service? Probably not.
Yeah, if we go to lockdown like New York, there ain't anything getting done. I can tell you that right now. Everybody will be closed. It'll be not fun.
Right, and for us, I got six jobs going on right now. Right, I got two that are really close, and I'm like, please, not this week. I got flooring and cabinets, and I'm done. Right. So what happens? What happens when it's not? Is construction work essential? No, it's not. All the contractors got to stay home.
I will tell you I'm seeing some good things out there where Trump has actually come out and said, hey, we may have gotten a little too aggressive too fast. And I'm seeing some other big names floated out on Twitter where they say, well, maybe we need to back this down just a little bit, which would be fine with me. So
until there's a million tests on the street, Jason, and then all of a sudden we go up 150,000 cases in the country.
Yeah, but I don't see every time I look at the data. I was listening to the Harris County gal this morning who was way over her head, and she said they could do 250 or 500? I think it's 250 tests a day per location in Harris County. I'm like, what's the point? I mean,
right.
What's the point? Unless you're doing 10,000 a day at each location. I mean, come on. There's 6 million people in the greater metro area.
Well, you got to believe that in the next 2 to 3 weeks, they will be at capacity where they can do 5,000 per test site. And when that number explodes, do we have another set of, government lockdowns and all kinds of restrictions, right?
Yeah.
Because that certainly is what happened in New York. New York, New Jersey, Connecticut, you can see by the little modeling here, exploded, and they shut everything down. But they also are doing, I think New York State was doing 7,000 tests a day. That's why they're expanding. Houston's got 2,000 a day now. So what happens when it explodes again, Jason? Does Abbott finally say, hey, shut it down? we're kind of blessed in Texas in that there are a lot more beds per capita for hospital systems. Like Jason, I was looking last night at Iceland.
Oh, there's nothing up there.
They have 588 confirmed cases, but Jason, as best I can tell, they have a capacity of about 3,600 beds.
Yeah.
So I don't. What we're telling you is there is uncertainty in the market, and when there is uncertainty, those that remain calm, have a good grasp, have a plan, are going to prosper. Those that are in denial and still running around like it was 2 weeks ago are going to lose. They'll get EMD and all kinds of other stuff tied up in deals that can't close. Right now, the only thing I'm raising money on is deals that I've closed. That's it. We have the fund. We're in a very strong position on the fund. We have 2 syndication, and the Corpus Christi syndication is further along. All those deals are already under contract. The renovations are going on, and we're actually renting some as we speak. The one for In the Loop, almost half the properties are rented. 13 of the 27 are already rented. And the other 2 properties we're going to go into doing the rehab. But if everything shuts down, do I go bankrupt? No. We've covered that. We have reserves. We are raising money for reserves. Are there going to be a lot of flippers who are going to be out of the business in the next 6 months? We believe so. Let's say you buy a flip today, and it takes you that 90 to 120 days to rehab. Who's buying it? Who's buying it in August? Is it anywhere near the number that you thought it was today? And the answer is, we don't know. One of the hard money lenders said, hey, I'm reducing it like it was the flood. I'm taking the ARVs down by 25%. Which means you're going to bring a lot more money to the table. And if you're still in that denial and euphoric on that curve, you got problems. You're going to get beat. And we talk about it on the radio all the time. The dirty little secret in this town, Houston, is that flippers got killed post-Harvey. Hard money lenders got killed post-Harvey. This is why guys, the hard money lenders, like, hey, I'm dropping it 25%. They want to do the deal. I'm taking that ARV down 20. You tell me it's a $400,000 house? No, it's a $300,000 house. Why? Because they got killed in Harvey. All these I'm a flipper. I'm doing all these guys who are talking to us. We know they got crushed. The guys that stuck to the $100,000 and $150,000 houses did very well. The guys went after those $500,000 houses got crushed. The private lenders got crushed on that. They're gun shy. I talked to a private lender and I'm like, yeah, hey man, we're taking care of you. Here comes the money. He's like, whew, good. We ask our private lenders, did you lose any money on Harvey? Have you ever gotten all your money back? Nope. And they're not talking pre-Harvey. They're talking post-Harvey. Because a lot of people made assumptions that just weren't real. So these experienced people are learning their lesson and looking at it saying, time out. The true answer to all of this is we don't know. Post-Harvey, everyone thought we're going to make a killing. And the people who made money were the wholesalers. They did very well. The flippers got destroyed. The properties never came back to those ARVs. They still haven't. I'm talking flood houses. So the answer is we don't know. Jason doesn't know. I don't know. And so we're taking a position of we're hopeful. And over the next 90 days, we really don't want to pick up anything with debt. If we have to, it's got to be a smoking deal. Like we have one that's a DSCR of 1.8. We're going to do that deal. Right? We got another property. We are all in at 700,000, and at a 9 cap, it's worth $1 million. We're going to do that deal. The ones that people are sending me in Baytown, hey, it's 2 bedroom, 1 bath for $55,000. Needs foundation, needs roof, needs upgrading. I'm like, hey man, you just told me it needs $35,000 worth of repairs, and 55 and 35 is 90. You're telling me it's worth 100. I'm not doing that deal. I mean, most of my responses to wholesalers are, price is too high. Let me know when it hits this number. And the answer from the wholesalers, a lot of them, because they're living on higher up in that curve, is, oh, I already have a buyer. We're going to be good on this. No, you're not.
See you in 2 weeks.
Right. And so anyone living in denial at this period, I don't know what to tell you. We're hopeful. We think there's opportunity out there. It's just got to sort itself out. And I think a lot of it is going to happen over the next 72 hours. Some more questions. Will evictions have the same treatment as foreclosures? Yeah, they're telling people they're not going to get evicted, right? And so if you're not letting the tenant, if the tenant has a get out of jail free card, regardless of the mortgage type, that becomes the problem. How is marketing affecting all the new construction going on? I think they're still working. I think young, healthy contractors are going to keep working. I don't think that's a problem until someone says you can't go on the streets. I would be getting my personal financial in the next 30 days. Get your personal financial statement in order. Do a little personal austerity. Go through your credit card statement, see what's hitting automatically. Make those things on timeout. Maybe readjust. Call your insurance carriers. They're all working at home. Get new quotes. See if you can cancel some other insurance. Just doing some austerity on your personal finances is going to help, because they're going to be looking at your statement. I don't think we should do a lockdown either, but again, the answer is we don't know. Guys, my opinion, Robert Orfino, Jason Bible's opinion, mean nothing. It's worth a glass of hot spit. We don't know, right? Don't be in denial. Don't be like, hey, Abbott's never going to shut the state down. How do you know? Well, this is Texas. So what? The answer is you don't know. There are unknowns. So if I have any advice to give, time out over the next 72 hours. Time out. A lot of the loans that are available have constricted. So we don't know. We just don't know the guidelines anymore. It's changing by the hour. If you have a hard money deal that's about to go long, I'd call the hard money lender. They know. They know. There might be something to do there. Will wholesalers get destroyed? Well, I mean, most wholesalers are broke anyway. So
they were
what does that mean,
before
right?
they got into the business.
Are we talking about the bigger groups? Yeah. New Western's going to take a hit. For sure they are. For sure they are. If there's
Those
no
guys they more operate like agents anyway. I mean, it's kind of.
Yeah, that's true. It's the other guys, right?
It's the guys that are spending $100,000 a month in marketing.
Right. And I just don't believe the guy who posts on Facebook telling me that everything is great right now. I think he's on the curve in denial. And I'm tracking these guys. I'm following these guys because I want to know if I'm wrong. Am I wrong? Because if I'm wrong, I have about $900,000 to deploy. I better get my ass buying. I don't think I'm wrong. And I'm having fun watching these guys delete their posts on Facebook. That's real interesting.
No, that is my favorite part.
The flu, this is just the flu thing. You're not finding any of those posts anymore. What other real assets besides real estate do you think they should look at, Jason? I mean, you talked about gold and silver last night.
Well, so here's the deal. I had a long conversation with a friend of mine yesterday about precious metals and all that other stuff. I think I'm rereading Aaron Clary's book, Bachelor Pad Economics right now, which is really good. And I think you keep 10% of your net worth in cash. And then I could see making an argument for half of that cash, that 5% of net worth being in some other stuff. Rob, if you want to share your screen back with me, let me see if I can pull this up.
Yeah, I'm done. What are you looking at?
I want to show you guys something, just like a fun little trade I was looking at. And again, if you're in portfolio building, I need to preface it with a couple of things. If you guys are like in portfolio building mode, and you need, your net worth is $500,000 and you need, 25 grand to go do this deal, and you got an extra 25. This is not for you. If you've got a substantial net worth, most of the guys in our mastermind group fall into this group. You want to hold on to some cash or cash equivalents. That makes a lot of sense. And I think, I'm trying to remember whose website. Here it is. I think it makes sense. Well, let me put it this way. I'm not doing this yet, but I'm looking at doing this, and I'm doing a little bit more research on it. Let me see if I can blow this up to show you what I'm looking at. So I can see going in and buying gold or silver. Now, this is very interesting because a lot of gold people are like, well, don't buy silver if you can buy gold, and silver is an industrial metal and gold is not. And I'm like, you're absolutely right on all those points. But what makes a gold silver portfolio really interesting is because they don't track each other. So they're in parity. And it's very interesting where you could run this little trade. Let me give you an example. So silver right now, when it hit $11 the other day, is like at a 12-year low. So let me pull this up. Let's look at the last year. So you can see silver just took a huge hit. Again, because it's industrial metal. So one of the things that had been proposed to me years ago, and I think it makes a lot of sense. Let's say your net worth's $3 million. So if you're worth $3 million, you got about $300,000 in cash, and you're doing real estate. And it doesn't really make sense to keep $300,000 in cash. However, you don't want to put that money into something that is illiquid, that has a lot of risk, relatively speaking. All of this stuff is risky, but I'm just saying, relatively speaking, something that doesn't have a whole lot of risk to it. Would you take, let's say, $150,000 and allocate a portion of that to precious metals, a precious metals position? And here's why I say this. Now might be I'm not a financial advisor, I'm not a CPA, I'm not any of that stuff. This is just something I'm researching right now. Would it make sense to go in and buy silver at, what are we at today? $13, which literally puts us back in 2004, 2005 prices. Do you go back and buy silver at $13? And then as silver increases in price, because it absolutely will, there's no reason why it wouldn't. It's an industrial metal, but we're lagging in industrial production right now. As silver rises, would you take your quote profits from silver and then invest those profits into gold? And you can see gold had a little dip here, but not much. And that trade is the gold silver parity, or this gold silver ratio. And you'll see right here, it's at an all-time low. So does it make sense? Hold on, that's the 3-month. Let me get it all out. Oh, I'm sorry, it's at an all-time high because silver is so devalued. So does it make sense right now to go buy a bunch of silver, and as it rises, as it regresses back to its mean about 18, 19, $20 an ounce, do you then take your profit in silver and transfer that into gold and buy gold for it? and essentially you're buying gold for, the profit that you earned in silver. Does that make sense? And that's one of the things that we're looking at right now. I don't think there's a massive amount of risk in gold and silver. I don't trust the stock market as far as I can throw it, but would you do that with would you do that with money that you needed as, quote, like a safety net, but you didn't want to keep it in cash? I can certainly see that making some sense. But again, this is just something that I'm just starting to do a little research on. I've looked at this before. I wouldn't do it with this. I wouldn't put a lot of my net worth in this thing. Again, I'm just saying it would be a very small portion of your portfolio, but it could make sense. And so when I ran into this article a couple of days ago, I remember Aaron Clarey talking about this in his book called Bachelor Pad Economics. And I was like, you know what? I need to go back and read this book. I'll tell you, it's not a boring book, but it is every bit of 500 pages. So it's his longest one he's ever written, but I'm going through it right now to exactly what Rob said. Do you want to look at some of your personal austerity right now? Go through and kind of tune the budget up and all that sort of stuff and get ready for to tighten the belt, if you will, to buy some deals out there. It's always good to kind of go back and retune from time to time. So that's what I'm looking at right now. Rob, you there?
I am. I also took a little, I bought into the stock market, but nothing big. Like I just bought like $400 and something worth of stocks for American. Nothing. It's just it's not it's hardly even mentionable. It's just I had a little cash left over and I wanted to make sure that it was all deployed right now in my account. So it was $400 something left. I was like, okay, let me deploy it today. So now I said it. Now I'll forget it. I'll take a look in a year and see where I'm at. That's part of it. If the money's sitting and doing nothing, there's probably a better place for it. So we'd love to have a conversation with you. If you want to text INVEST 281-401-9008, we'll make sure that Brian reaches out to you today and gets a hold and goes through some of the opportunities we have. We're about to wrap this up. We'll be on again tomorrow night. Assuming the real estate markets inflate, will they make the build inventory and their second and third phase more competitive with inflated? So you guys are looking for ground up. I don't think ground up is still going to happen. Going to be something we'd be looking at here for the next year.
Are you going through questions?
People will be making plans. Well, they're talking about the development second phase and third phase. Will that be more competitive? And, listen, if you're going to buy ground up, you always want to buy phase one, right? Phase one is when you want to buy, because by phase 7, you've made your money, you can walk away. That's always the thing. When that was the great thing when it was all happening in the 2004, 2005. You always want, how many phases are you going to do is the thing you want to ask. And if you hear anything more than 3, you're like, what phase are we in? Oh, we're in phase 1 and you're doing 5 phases? I'm in. Right? So always just be aware of, that's just sort of classic stuff. I don't know how much it costs to move gold and silver back to liquid.
Well, there's some tax implications there and some other stuff. You really need to talk to your CPA and that sort of thing.
Yeah, if the builders own the land, I mean, yeah, they'll still be ground up constructions, but are those ground up loans at 6% or 4% like they were a month ago, or they go higher? I don't know. I just started an Airbnb. I don't have any reservations moving forward. Do you think I should cancel this and put it out on the market? I think that a lot of Airbnbs with Superhost and a lot of reviews are going to get more traction than something just starting. If you can find someone who's looking for 60, 90, 120 days, yeah. We've got 1 or 2 we're thinking about just putting out there as furnished apartments. Yeah, I would be looking for anything. I would definitely not just think it's going to happen in the next week. I'd start being proactive.
Or I'll just pitch Rob as part of our mastermind group, and George too, to help you manage these Airbnbs. I mean, come on, guys. Our mastermind's $7,500 a year. You guys will blow that on missed bookings. Why Airbnb people? We ought to have all the Airbnb people in Houston in our mastermind. I'm like, we will save you $7,500 in lost bookings. I mean,
Oh yeah.
or in just furniture. I mean, it's kind of crazy when you think about it. So,
Yeah, like we're getting it now. We shifted over into small short-term rentals, 90-day type deal. Some travelers are stuck in place here, that type of thing. We've gotten a few of those phone calls. We got in a family who sold one house and thought they were going to be able to close on another. That got pushed, and they're freaking out. They asked for a 30-day place to live, so that kind of thing. So what I'm saying to you is if you have Airbnbs right now, you're doing your own marketing. Don't just rely on Airbnb to rent the property for you. You've got to start getting aggressive and do your own marketing. All right, guys, if you're interested, let me know. If not, we'll be back tomorrow night. Thank you very much. I've got some mac and cheese to finish here. Anything else, Jason?
no, that's it.
All right, guys. Thanks a lot. Have a great one.
All right.